Welcome back to AlgoBot, the channel where we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. I'm your host here at AlgoBot, and today we're studying a pure price action system called Pivot Stop Hunt Reclaim. What makes this one interesting is that it uses no indicators at all. No moving averages, no oscillators, nothing. Instead, it reads raw swing highs and lows and waits for the market to spike through them and snap right back. By the end of this video, you'll understand exactly how it spots a stop hunt, how it confirms a reclaim, and how it places its stops and targets. Let's dive in. So what exactly does the Pivot Stop Hunt Reclaim Expert Advisor do? At its heart, this is a support and resistance reversal strategy built entirely on price action. It can be applied to any market that MetaTrader 5 supports, currency pairs, indices, metals like gold, even crypto, and it works on whatever time frame you attach it to. The core idea is something every experienced trader has seen. Liquidity, in the form of resting stop orders, tends to pool just beyond the most obvious swing highs and swing lows on the chart. Large participants are drawn to that liquidity. Price often spikes through a well-known level, trips those stops, and then immediately snaps back inside the range. That failed breakout, the stop hunt followed by a reclaim, is exactly what this strategy is designed to catch. Rather than relying on a lagging indicator, the EA defines support and resistance using confirmed fractal pivots. A pivot is a high or low that stands as the extreme over a set number of bars on each side, so it represents a level the market genuinely respected. The EA then watches for a single closed candle that pierces one of those levels, closes back on the correct side, shows momentum through its own candle geometry, and expands beyond the recent average range. Because it measures momentum from the candle itself rather than from an indicator, every decision is grounded in what price actually did. This style suits traders who appreciate clean, rules-based reversal logic and who prefer structure-based stops and targets over indicator soup. It's patient by design. It ignores quiet, average-sized bars and only acts on decisive displacement. Remember, everything here is for educational purposes only, so we're exploring how the logic is built, not making any promises about results. Let's walk through the exact mechanics, step by step. The EA acts only once per bar, working with the candle that just closed, never the one still forming. On each new bar, the strategy first refreshes its support and resistance. It looks back to a candidate pivot sitting a number of bars in the past, set by the PivotLookback input, which defaults to 3. For that candle to be confirmed as a swing high, its high must be greater than the highs of the 3 bars on its left and the 3 bars on its right. The mirror rule confirms a swing low for support. Because the EA waits for bars to form on both sides, these are confirmed pivots, not guesses about the current candle. Next, the strategy checks whether it already holds a position. It allows only one open trade per magic number at a time, so it won't stack entries. Then it measures the setup candle. It calculates the candle's range, the high minus the low, and compares it to the average range of the previous bars defined by the range window input. The candle only qualifies if its range is at least the displacement factor times that average. By default, that's 20% larger. This is the displacement filter, and it keeps the EA out of quiet, indecisive bars. Now the signal logic. For a long, the EA detects 3 things on that closed candle. First, the low must pierce below support. That's the stop hunt. Second, the close must finish back above support. That's the reclaim. Third, the candle must be bullish, and its close must sit in the upper part of its range, governed by the CloseLocation input, which defaults to 60%. When all of those align, the strategy signals a buy at the ask. The short side is a perfect mirror. The high pierces above resistance. The close finishes back below it. The candle is bearish, and the close sits in the lower part of its range. That triggers a sell at the bid. Finally, risk. The stop loss is placed just beyond the stop hunt wick, below the candle's low for a long and above the candle's high for a short, with a small buffer set by the SL buffer fraction input. The take profit is then a fixed multiple of that risk, controlled by the RewardRatio input, which defaults to 2. So a setup risking 20 pips would target 40. Everything is structure-based and fixed, with no moving stop or trailing logic to second-guess the original idea. Here's the heart of the code as it appears in MetaEditor. Up top are the input parameters. These are the dials you can turn without touching the logic. PivotLookback sets how many bars on each side define a swing pivot. A larger number means rarer but more significant levels. Range window sets how many bars feed the average range baseline. Reward ratio is your take-profit multiple. Raise it for bigger targets, lower it for more frequent fills. Close location demands the candle close near its extreme, filtering out weak reclaims. Displacement factor controls how much bigger than average the setup bar must be, and SL buffer fraction adds a little cushion beyond the wick for the stop. Below the inputs is the long entry block. The code reads the closed candle's values, the open, high, low, and close that were captured earlier. It then builds for checks. Pierced is true when the candle's low dipped below support. Reclaimed is true when the close came back above support. Bullish is true when the close is above the open. And close pos measures where the close landed inside the range, where 1 means it closed right at the high. The single if statement requires all 4 to be true together, and it requires close pos to be at least your close location setting. When that passes, the EA reads the current ask price as the entry, sets the stop loss to the candle's low minus the buffer, and computes risk as entry minus stop. As long as that risk is positive, take profit becomes entry plus risk times your reward ratio, and the order is sent. The short block, not shown here, is the exact mirror image using resistance, the bid, and the candle's high. It's clean, readable, and every decision traces straight back to price. Let's bring it to life on the chart. The green dashed line near 1085 is our confirmed support, a swing low the market respected earlier. The red dashed line up near 1092 is our confirmed resistance. Watch the left side first. Price drifts down towards support, and then one decisive candle spikes its wick below the green line, tripping the stops resting under support. But notice the body. It snaps right back, closing well above support, finishing near the top of its range, and it's clearly larger than the bars around it. That's the stop hunt and the reclaim with displacement, all in one candle, and the EA fires a buy entry. From there, price pushes higher over the next several candles until it reaches the take profit, set at twice the distance from entry down to the stop below that wick. The long trade is complete. Now watch the right side, where the logic flips. Price rallies up into resistance, and a single candle pierces its wick above the red line, sweeping the stops resting above resistance. Again, the body rejects. It closes back below the line, finishes near the bottom of its range, and expands beyond the recent average. That's the short signal, and the EA fires a sell entry. Price then rolls over and slides down to the take profit, again measured at twice the risk above the stop hunt high. Notice what the strategy never does. It never chases the breakout itself. It waits for the breakout to fail and for price to reclaim the level before committing. The support and resistance lines are the only reference. There is no oscillator panel here because this system reads pure structure. This is an illustration of the logic for educational purposes, not a prediction of how any real market will behave. And that's the Pivot Stop Hunt Reclaim Expert Advisor from top to bottom. We covered the core idea of liquidity pooling beyond swing levels, how the EA confirms support and resistance with fractal pivots, the exact entry conditions for both longs and shorts, the structure-based stop, and the reward multiple target. And we walked through both the code and a chart example. Remember, this video is for educational purposes only and is not financial advice. If you found it helpful, please hit that like button, subscribe for more MetaTrader 5 strategy breakdowns, and drop a comment telling me which expert advisor you'd like me to analyze next. You can find more at www.algobot.live. Thanks so much for watching, and I'll see you in the next one. Past performance does not guarantee future results. Trade responsibly.